Business Insider, for those who don't know, is one of the leading business publications online. It's backed by a number of major venture firms, including RRE, Institutional Venture Partners, and many others. The site attracts over 25 million viewers a month, and I'm sure that number is fast out of date. But I want to welcome them on stage so we can have a great discussion about Silicon Alley and its growth, as well as Business Insider itself. So please join me in welcoming them onto the stage.
Mic on?
Are we standing?
Yep. No.
Oh.
I'm just going to stand for a sec. You sit down. Hey, folks at the back, I have a favor. There are plenty of seats. If you're going to sit, please come in now and sit down. Fill up some seats. If you're not going to sit, if you could stop the chatter at the back. It's a little distracting for the people in the back row. Right? You guys? Yeah. Okay, we're going to spend the next 40 minutes, and it's going to be pretty exciting. I wish we had more time. But Henry has such a long history. We've got a lot to cover. We're going to try and cover the early years pretty quickly and then focus more on Business Insider. But before we start, I would like to clarify what Victor said. Business Insider does not have 25 million uniques a month.
70.
70.
Biggest business publication in the world. Much bigger than the Wall Street Journal now.
Yeah. Number one, and we'll get into that in a second. My role for the next 40 minutes is to be Charlie Rose, so I'm not Jonathan Bulkeley, I am Charlie Rose.
Welcome,
so
Charlie.
You can call me Charlie.
Okay.
Last night I saw that Amazon announced earnings, and for the first time they broke out AWS, and for those that don't know, Henry started his career with the Amazon projection. So I really wanted to start with that because it broke through $400 a share, which split adjusted, I'm not quite sure what it is these
66.
days. Yeah, but it's $180 billion. And in 1998, 17 years ago, you made a prediction, and that prediction has led you here today. So I'd like to start with that moment when you penned the first Amazon piece.
Great. Well, so first, let me just say it's a huge privilege to be here. Thank you, and I hope it will be interesting. And I assume we have a Q&A. Somebody that'd be great. Ask anything. Just a quick snapshot in case Jonathan has assumed that you heard some things about me. So I graduated from Yale in '88. I spent a year teaching in Japan. I came back. I was a journalist and a writer for about 3 to 5 years. I was teaching tennis to pay for that. I came to New York. I worked at CNN, Audubon, Harper's, a few other places. In my late 20s, I decided to go into the finance industry, went through an investment banking training program, ultimately became an analyst, which is sort of a hybrid of journalism and banking, and was the right place for me within that industry. Started that, the internet came along, it created 30 empty chairs in research departments where people needed to follow the internet. If you got a browser a few days ahead of the rest of the people on your floor, you were suddenly the internet expert. So I had been in tech banking, so it was a good fit. Got sucked into that, was an internet analyst for a little while, and then made a call that got a lot more attention than I certainly thought it would when I made the call, which Jonathan's referring to, but let me take you through the quick snapshot. So I went on, I was working at a smaller firm, I went to Merrill Lynch, I was there for 3 years, was very much in the news as an internet analyst. Then when the market crashed, I also got caught up in the big regulatory backlash. The then Attorney General of New York, Eliot Spitzer, went through my emails and found some emails that he found particularly exciting and scandalous, and he publicly keel-hauled me in front of the world, and I got kicked out of the securities industry. Basically, the allegation was, you said some things in email that showed the true thing that you think about a company, and the report didn't have the exact language in it, so obviously the report was misleading. I pleaded my case, which was, we weren't allowed to say piece of junk in the report. That's an SEC regulation. But you can say that in email. Doesn't mean the stock's not going to go up. That fell on deaf ears.
Was the word junk? Or?
Yes, piece of junk was one of the famous emails. If you Googled me, piece of junk, up it will come. On a stock, by the way, that had dropped 93% at that point, I thought describing the situation fairly accurately. It was self-evidently a piece of junk. It had gone down 93%. But anyway, we'll talk about that if we want. So I got booted out of the securities industry. I then went back into journalism, which was basically the only thing that I could still do. I didn't think that anyone would ever employ me. I called an editor friend of mine. I said, Larissa at the New Yorker, is there anyone in New York that would publish me, given that I have been so thoroughly flogged? And she said, I know just the person. And the editor of Slate, Jacob Weisberg, said, come on board. And so I came on board, I wrote that, I did a lot of freelance stuff, started writing a blog, and then in 2007, I was actually called by another Yale graduate, Kevin Ryan, who had been the CEO of DoubleClick during the whole boom that I had gotten to know him. He said, look, thinking about starting a tech publication in New York in digital, like a TechCrunch for New York, what do you think? Met with Kevin, we decided we wanted to found this company. That was Silicon Alley Insider, which we started in 2007. Has just evolved over 8 years into quick Business Insider and then much bigger, and now digital publishing in general. And as Jonathan was kind enough to mention, we last year passed the Wall Street Journal as the biggest business publication, period, in the world, which is great. We're now read in, thank you. Read in something like 100 countries. We have 7 international editions, including Australia, and our team is now 250 people. We have an office downtown. Been just an incredible privilege to watch the company grow and so forth. So lots to talk about. So going back to Amazon, if that was the question.
Wow,
so,
I need a shower.
Sorry, I wanted to give you a picture because I'm sure maybe little things have crept through, but the full picture, because it certainly has been an unusual career path, is what I would say. Folks at the company who are just out of school ask me, like, what's your career advice? And my first career advice is, don't try to mimic my career trajectory because it is bizarre in many ways, and we can get into that. But so with Amazon, basically, as you remember from the early internet years, the way technologies proliferate and the awareness of them, you find a small group that gets very inspired by a new technology. Prices get bid up around the people who are capitalizing that technology. These prices look crazy to people who don't understand the technology, haven't heard the stories that folks inside have heard. And so we always go through this period in the press where the press on the outside is just gawping at these obviously ludicrous valuations that inside investors are paying. Amazon was a classic case of that. When it went public, it had no profit, of course, because it never had profit until last night, which was very nice, in one division, which now I know Jeff will just cut prices and eliminate the profit because that's what they do, and that's brilliant, by the way. Ignore all people who say that businesses should make money. Forget it. Just reinvest the money, and you can become Amazon, and Wall Street will forgive you for that. They're fine. Amazon stock price is good. But anyway, so Amazon was incredibly controversial. Lots of people were calling for it's going to go out of business. It's terrible. It's just a bookstore. It's worth more than Barnes & Noble. And you were the CEO of BarnesandNoble.com at that point, looking up at the ludicrous Amazon valuation. So basically, I was doing the conservative thing, which was, well, raise my price target 10 to 15% above the current price, love Amazon, so forth. And finally, one of the folks on our institutional sales force was like, Henry, look, I'm sick of you getting up every morning and say, you don't kind of like Amazon, 10 to 15% upside. Like, what do you really think it can do? What's it really worth? And so I fiddled with my spreadsheet for a couple of days, back of an airplane coming back from Houston, I remember it, said, look, like, if the world evolves the way we think it can evolve, this stock could be worth $500. And I computed that a few different ways. It was then trading at I think it had gone from 90 to about 200. And so I just went out and said, well, it'll be a little more conservative than that. So I said, okay, price target, 400. And by the way, that's no different from raising a price target on a $20 stock to 40. But because it had gotten to 200 and it had another zero, everyone went crazy. And so suddenly, lots of excitement around that. Fortunately, that target played out for a little while. It went to something like 550, which was nice. And then it went down to 6, I believe, several years later.
98%.
Yeah, 98%.
In 18
and it was going to
months.
go out of business, and it was always a terrible idea, and anybody who liked it was an idiot, and all that stuff. I wrote it down. I actually had my own money where my mouth was. So forth. But now I'm happy. Yes, I still own it. Great long-term investment. So anyway, that was the Amazon story.
Okay, I don't want to dwell too much on the past because it was a long time ago. But it's an amazing time. We both went through it. The cycle up was euphoric. The cycle down was quick and brutal. What was that like for you? I know you were getting investigated at the time, and
Well,
eventually
that sucks.
disbarred.
I mean,
so,
yeah.
but
You don't
but
want
the
to
up
go
and
through
down, that bust. Did you realize the euphoria on the up, and what was the bust like for you going down?
Yes. So I spent my life, there's this like family lore around me. Apparently some great-grandfather somewhere was riding the Siberian Express railway during the 1929 crash, and he went from being a mogul to penniless, and this kind of permeated my family growing up, back the glory days and so forth. So in the 1990s, when I went to Wall Street, I used to ask a lot of people, because you would hear old-timers say like, oh, is this building up to be a huge bubble? And so I would ask people, especially toward the late 90s, is this another bubble? Are we in the 1920s again? And everyone's like, no, it's not. We have great accounting now, and the SEC, and everybody's smart, and so forth. So no, it's not like the 1920s. Of course, it was worse than the 1920s. And so the big lesson for me was, first of all, everyone says now, oh, they were just such idiots in the 1990s. That's actually, some of us were. I plead guilty to idiocy. But it's not that we weren't talking about the fact that it was probably a bubble. In fact, a lot of us were. And the question is, what decisions you make in the meantime, and when is it going to end, and so forth. And so nobody knew those questions. It lasted a hell of a lot longer than most people in the 90s thought it would, and then it ended suddenly over a period of a year, and suddenly there was this wreckage everywhere. But we did have a good sense that it was probably going to end sometime, and good companies would come through it, and others would not. And the ratio was about what we expected. I think something like half of companies probably just disappeared, and others sort of merged, and some have come out of it well. But yeah, the backlash is, it's intense, and there always is a regulatory backlash, which is something that I only learned after the bubble. I read John Kenneth Galbraith's book about financial bubbles. It's just part of the pattern. It's when stuff gets changed. It's the same thing that happened after Enron blew up and after the financial crisis. We then have all these new laws. This is what happens. Everybody gets angry. They want changes. You get some changes. Then we launch into the next bubble cycle. But to be clear, what is happening right now is nothing like the 1990s. There are echoes of it, but it is still a much, this is in technology, a much distant echo. Technology has always been cyclical. I think we are getting to the end of this cycle. There will be a drawdown in which all of the folks who are being lionized as geniuses now, and all the money raining from the sky on anyone who has an even remotely interesting idea, will stop. Lots of companies will go broke. Money will be much harder to raise, and we will go through a tough period for a while. But there are real companies out there with absolutely astounding fundamentals that are worth a ton of money. And a lot of them will get through it, and the changes that the internet is still bringing to the world economy are unbelievably profound. So the idea that this is all hallucination is crazy. The cycle will end at some point. Valuations will get hammered, and then we will start the process again. We've gone through about 4 of these cycles since the 1980s.
So we're going to get back to this in a little more detail towards the end.
Okay, I'm going to give shorter answers.
I will just point out that Castlight Health did go public at $12 million in revenue and had a $1.4 billion valuation the first day, and that seems a little out of whack to me.
Everyone is excited about the future of digital healthcare.
So there could be some mini bubbles within
there are plenty.
Yeah.
There's going to be carnage everywhere. I'm not trying to suggest otherwise.
The question is just when.
Yeah, and also, is it as total as the wreckage in the 1990s? Right. And the answer is, we're not. A couple more years of this, at this glide slope up, yes, then you can start saying, okay, whoa, it's really like the end of the day.
I want to go back for a minute to the sort of Merrill Lynch stuff and Mr. Spitzer, just for a moment, because I don't think you were totally fair. I think Spitzer was coming after Merrill Lynch. You were part of it, but it was a bigger play, right? And Merrill Lynch got fined a lot of money.
A lot of money.
Hundreds of millions of dollars.
As did the industry, by
process.
the way. It wasn't just Merrill.
Yeah, so you weren't being isolated in that.
Oh, I was nicely isolated.
Well,
we wrote some very colorful emails that made wonderful evidence.
So I have to ask you, because I don't know if this is true or not, but obviously Merrill paid a lot of money. Lonnie Steffens was the vice chairman of Merrill at the time, I believe. And several years later, Mr. Spitzer was under his own investigation, and there was some rumor that Mr. Steffens might have hired a PI and leaked it to the press. Any truth?
I have no idea.
It's a good story, though, right?
That was certainly
could have been payback.
It was certainly an interesting story to see pop up on my screen at Business Insider when it came out, I must say. And at that point, again, to basically bear markets for Wall Street are bull markets for regulators and lawyers. We saw this with Rudy Giuliani. Elliot Spitzer capitalized on it marvelously. People were really talking about him being a president. I mean, he was just glowing in the public, and then suddenly just a fantastic fall. And I should say that, though, but I need to finish the story, because this was all 15 years ago for me. So Elliot Spitzer and I are now kind of friends. I mean, it may be the two disgraced guys go off and have lunch once in a while, but we had lunch recently. Talked about his kids and what he's doing now, and same thing for me. It's a little weird, but life is long. One of the things that somebody told me, a friend of mine is a disaster PR person, and I called him in the middle of the absolute global thumping that I was received, and it was unbelievably intense for a little while. And I basically said, look, I don't mean to drag professional stuff into this, but is there anything that I can do? And he basically said, no. You can't say anything because you're in the middle of legal stuff, so you can't protest, and you can't say anything, and wouldn't help anyway because those were some pretty colorful emails, and people are really pissed off, and so it doesn't matter. But he said, the good news is just ride it out. Eventually, it will become this story of what happened a long ago. Play a long game. And the example that he used, which is very interesting, you may not remember this, but back when Prince Charles was with Diana, the now future Queen of England, Prince Charles' wife, I believe, named Camilla, the press hated her. Every day is a story about the Rottweiler and how awful she is, and she's breaking up this storybook marriage, and we hate her, we hate her, we hate her. He said, notice, she never said anything, ever. And then 10 years later, the press has come around, they want her to be queen. So his basic message is ride it out. And that's incredibly hard to do when you have basically been out there trying to be very forthright with people. That's why people actually liked me in the 90s was I would go on CNBC, I would speak in normal language. I wouldn't talk about EBITDA and stuff like that. I would just speak normally and say this is what could happen with Amazon. People liked that. I was optimistic. That helped. The stocks were going up. But I suddenly couldn't say anything. I had a ball of socks shoved in my mouth, and I was thrown in some back closet with duct tape around my head. And it was basically just kick Henry for 2 years. And fortunately, again, he was right. You play a long game, you come through it. I still, anytime I write something that somebody doesn't like, they post Spitzer's press release on the site. And I get it in my email, so it's never going to go away. But you do, in fact, you can go through it.
Okay. I think I'd love you to focus on this a little more, which is the resurrection, because many people go through traumatic things. Not all of them bounce back and build a number one business in their category. So that transition for you and that transformation for other entrepreneurs and other people in your personal lives is really important, that resilience. So there must have been a moment that was your nadir, or sort of a week or two
Yes.
or three that you hit bottom.
No
and
question.
somehow you came off bottom and are here today with an amazing story. So talk about the bottom, because we're going to talk about the up on the other side.
Well, so I'll talk about the first up. And I should say that when I was going up, and it was a very spectacular, meteoric rise that was just mainly about me being in the right place at the right time. And again, making the Amazon call, I got a lot of attention. Happily, it worked out, which a lot of my other calls did not. That helped. There were lots of little stories at the time. There was intense interest in the internet and so forth. So the fame, which I was not seeking, came very easily. And what I would liken it to is I was out there paddling around on a normal surf day, waiting for surfboard, and nice 3-foot waves, and it's cool, I'm doing my job. And then suddenly a 100-foot monster wave comes along. And I was able to stay on the board. And I was actually proud of that. I did the best job that I could under the circumstances. It worked out very well for me. Challenging, working around the clock, huge demands and things like that. But I felt pretty good. Like I had tried as hard as I could to manage all the different conflicts and so forth, and learn quickly about being this big public figure and how to speak carefully and so much of it. And it was very fast. I was only an analyst for 5 years, which I look back now, that is the defining part of my life. I've actually been doing Business Insider way longer than I was an analyst. So it happened, but some people, when they go through that, they kind of believe all the press around them. I didn't mind it particularly, but I wasn't like, oh my God, the Philadelphia Inquirer just wrote a profile of me. I am so great. I never really got in. I said, well, right place, right time, do the best you can, and so forth. So when it all reversed and I was getting crushed, I at least didn't have to also face the fact that I had been deluded about myself while things were going well. I always felt like, okay, I was riding this huge wave, I managed to stay on the board, and then I hit some major league rocks, and I have been splatted beyond belief. What can I do? So forth. At that nadir, and it sucked. I just basically.
Was there a
said,
moment?
It was just a
Or a
period
week
of
or
time
two?
where, I mean, literally, like, I would walk out of my door, and the New York Times is working on another story about you, and so forth, and it's a small story, and do you want to contribute? I can't contribute, I can't say anything, I can't even defend myself because we're in this legal thing, so forth, the firm's handling all that. And then it becomes a front page thing, and I step over it as I leave my apartment in the morning. It's like, oh my goodness, the hometown paper trashes me again. I mean, it got to that level. Every acquaintance I had who was an acquaintance because of where I was, they wouldn't talk to me anymore. The good news is my core friends thought it was a bunch of BS, and they were right there for me and my wife and my family. And what I realized, most importantly, it's like, this is just, it is a professional disaster, but that's it. And there are so many things that are so much worse than that. A couple of weeks ago, the son of a friend of mine was killed in a plane crash. That is actually a tragedy. It is something it's just a completely different order of things. So for me, I looked around, it's like, I didn't lose half my brain in a car crash. I can still talk, I can still write. This has been an amazing experience. Maybe I can use it in some way. It has definitely made me smarter about the world. I've learned things. Okay, I'm going to spend the rest of my professional life trying to earn back some of the trust that was just destroyed. Because it was a huge privilege to have it in the 1990s. I didn't go seeking it, but I had it. I'm going to try to earn it back. I understand that a lot of people will never give me that chance, but the ones that will, every day, I'm going to try to rebuild that. And that's what started, and in the beginning, with the egg throwing and rock throwing and fruit throwing was quite intense, and it still is, occasionally it comes up, but just every day trying to effectively regain the trust that I had lost. And yes, I don't know, I'm not sure what it was, but there was definitely something that I just wasn't going to quit on that, and I was going to try to do something of value. And fortunately, ultimately, it's like if I had remained in the securities industry, I probably would have gone to a hedge fund. That would have been the easy route. I stopped to write a book, and I wrote a book, but of course, legally can't publish it, or couldn't. Maybe eventually someday. It's still sitting there on the shelf. But I probably would have gone to a hedge fund. That would have been the easiest route to go. Hedge fund, good, smart work. It's fun, make tons of money, kind of easy, and so forth. But I was actually forced to do this other thing. And now I'm so happy that I was forced to, because every day it's just so creative and fun, and it's such a privilege. It's a new medium. You get to figure out how it works and tell stories. Ultimately, fundamentally, as illustrated by what I did when I got out of school, I'm a storyteller. That's what I do. And so now, come back, this is actually way better for me. And so ultimately, it did work out well, although again, I wouldn't have planned it that way.
Okay, so let's focus on the positive, which is the ramp up. What was
What
was the original idea?
So the original idea was, look, there's this new medium. If you go back through the history of media, what happens when there's a new medium is existing media say, whoa, it's a new medium. It's a green field. We're going to just take what we do and shove it into the new medium, and we're going to be heroes. So if you go back to the beginning of TV, the first TV news broadcasts were some dude reading a newspaper in front of a microphone. Okay, well, that's not completely awful, but maybe you can do better. Like pictures, they're actually worth 1,000 words. And in fact, great video of exciting stuff is worth way more than that. So maybe we can do different things in television that we can't do in print. And so this incredible new medium of TV evolved. TV journalism is so different from newspaper journalism. Different business model, different pay scales, way more. Evolved into something and much, much more influential, because it turns out that actually it's easier to watch TV than read, and you can learn things that you can't learn in an article and so forth, although they didn't teach me that at Yale. But it became clear that Fox News is actually a lot more influential than a lot of the publications I was raised to think were the absolute pinnacle of journalism. So Anyway, that evolved. So we said the same thing's going to happen in digital. We just got to figure it out because we know that just posting a newspaper online or putting a TV network online doesn't work. The business model doesn't work. It's not what people want. They don't want to watch TV online. They want these new things. So what is working? What did we look at? We looked at Drudge, which was killing it even then. We looked at Gawker Media, which was killing it. Huffington Post, which was killing it. We said, okay, these guys are on the trail of what digital journalism is going to look like. And so we experimented. We didn't try to jam a newspaper peg in the hole. We just said, figure out what works. Lots of boneheaded ideas. But fortunately, some of them worked out. And we just kept doubling down on the ones that worked out. And ultimately, we still, every day, we come in to serve our readers. We have a new generation of leaders. They're almost 100% digital. They want their stories to be short, quick, illustrative. Yes, we love our 3,000-word New Yorker articles sometimes. But during a busy day on this, kind of hard to read them. So maybe a quick synopsis of that or bullets. Or maybe on the weekend, a super long one. We have published 25,000-word stories when it's warranted. We can do that. But short videos, long videos, you can do pretty much anything, but you just got to figure out what is it that people want, what will they want to consume, what do they care about. We have these incredible analytics that show us what people are reading, what they're interested in. So every day we come in, we try to serve our readers, and that has been a huge advantage. Because a lot of our competitors had the incredible challenge of having to put out a world-class newspaper every day, which, in case there's any question, is extremely difficult. And to have to do that and to compete with all these upstarts in digital, it's just immensely difficult. And Jeff Bezos took me down to the Washington Post last year, met with the editor team, just incredibly impressed, and a new sense of just how hard it was for them to put out this amazing newspaper and have this website that's supposed to be competing with BuzzFeed and Huffington Post and all these other guys who just do that. But long-winded answer, which seems to be the only kind I'm capable of this morning. We are experimenting every day to figure out what works in this medium. The industry is still figuring it out, but we're starting to get a good sense of what these companies can look like 10 to 20 years down the road. And hopefully we'll continue to have you all read us occasionally and continue to get better.
So let's dive a little deeper into that. You've gone from 0 to #1 in 7 years, 8 years. You've crushed the traditional media companies. Why can't a traditional media company compete in this market? You touched on it a little bit, but it's important to dive in a little deeper.
Nobody has crushed anybody yet.
Well, becoming #1 in 7 years.
TV is doing just fine. And the quick anecdote of when I finally, because I've been predicting the death of television wrongly for 10 years, when I finally realized how wrong I was about the death of TV was when I went on the Today Show one morning. And before the Today Show, you get the makeup guy, and everybody has the makeup guy. But then there was a dude at the Today Show who does nothing but steam suits and roll lint off suits. And I said, oh, if you can afford this guy, you are in great shape for a long time. There is just colossal amounts of money in television. So the death of television is going to take a long time, and it's probably ultimately going to look like the death of print, which if you are at the New York Times has a wonderful digital business. $400 million a year, that would support 800 top-notch, excellent journalists. We would be so stoked to have the New York Times digital business someday. That would be amazing. So nobody is crushing anybody except in this readership metric, which hopefully foretells long-term success as we add the business to it, we add more and more people, and so forth. And now this is all preamble. What was the question that you asked?
Question was,
how do we do this?
Why can't the traditional media guys, how come they didn't do it?
Anybody can do anything, but focus matters and works. And again, to me, asking the question like, well, why can't the New York Times just do that? They can, but digital is as different from print and television as print and television are from each other. So the same question would be, why didn't the New York Times just make CNN? And part of the answer is, well, you're not allowed to own networks in 2 markets and newspapers and so forth for regulatory reasons. But you can see the challenge. It's actually fundamentally different at a very profound level. It's the same thing for digital. It's a different editorial approach. It's different storytelling formats. It's a different speed. It's a very different business model. It's a different training for the journalists. There are 1,000 little differences, but they add up to something very different. And when you've got 90% of the smartest people in the building, and there are brilliant people in that building, focused on putting out a world-class newspaper every day, and the other 10% are second-class citizens whose ultimate hope is that someday someone at the paper will realize that they're talented enough to be put into print. That's the problem. At our shop, every brain in the building is focused on making digital as good as it can be, and we have so far to go in terms of how much better we can get. We're good. Ultimately, we want to be excellent. But that sense of focus on something that is different and difficult makes a huge difference. It's why Amazon succeeded. They didn't also have to run this colossal store network, which is also incredibly different and difficult. They were just able to focus on commerce. And another thing, Bezos talked to me. He was an investor. I don't know whether you mentioned that. I'm not just dropping his name for the hell of it. We actually think is he said like it was more than a decade before they could begin to say, okay, are there other things that we can do? It was that hard to build and figure out e-commerce. And even now, every year, it's still, we got to get X% better, X% better, X% better. And that level of focus makes all the difference.
Okay, so for the entrepreneurs in the room, I'd love to focus on your transition from entrepreneur to CEO, from 3 employees working in an elevator shaft to 175 employees and managing people and not just focusing on the product every day, but also running a business, raising money, dealing with shareholders, et cetera. So how's that transition been?
So I've always been CEO. From the first day, I was the first employee as CEO and founder and all that stuff. So it's been a very gradual transition. Basically, the first thing they should teach you in CEO school, if they haven't, is you got to figure out what you're good at, and you got to hire people who are great at everything else. Stop doing the stuff that you're bad at, that you don't like. Find someone who loves it, who's great at it, and delegate the hell out of them. I pinged another friend of mine who's been incredibly successful. He's speaks in few words, but they just echo in your head forever with their pithiness and profoundness. I said, I'm a CEO now. What do I do? And the email came back. It said, hire great people and get out of the way, period. So I have learned to do that. And what I am good at is the editorial stuff, storytelling, new medium. How do we experiment? What's the best way to tell that story? What do the readers like? And so forth. What am I not as good at? Everything else. I do like strategy. I like the business because I came from the Wall Street analysis. I studied businesses for a while, so I want to make sure we have the business model that works. When I go out on the advertising side, what do? Am I selling? No, I suck at that. We have somebody who's great at that. What I do is talk about digital journalism and media, what we've learned about Facebook and so forth, and then our wonderful sales team goes in and does that. The 5th hire at the company was also a Yale graduate, Julie Hansen. She's the president of the company. She is great at managing. My management philosophy when I came in was like, just do it well. It's like, well, that's not actually there are other better ways of managing. Let's put it that way. And so she's very good at that. She's very patient, so forth. And so she learned all that. She's very organized. She runs the company. She makes sure we hit our numbers and so forth. So I focus on editorial, and I do what I'm doing today, which is go out and talk about the great future of digital journalism. And that's the key. And ultimately, as companies get bigger, as you know, you always have to ask yourself every year or so as you get bigger, it's hard to be world-class at anything. And there are CEOs of companies who, they're just world-class CEOs, and they lead thousands of people. And you do have to ask yourself, or I ask myself all the time, and the board asks me all the time, are you still the guy? Or should we get a CEO, and you can be Mr. Editorial Storyteller? And thus far, I have felt a passionate thing to say, nope, I want to do that, and can I drop his name again?
Sure.
One of the advice that Jeff gave me was, he said, look, because I asked him the same question.
The guy sued me once, so we got to be careful.
Sorry about that.
But Mackenzie, his wife, worked for me as an intern.
There we go.
So it's all good. It's all
good. I
good.
said, Jeff, there's a question, should I not be CEO anymore, and so forth, and he listened, and he's just so astoundingly smart. Like everyone is smart. We meet smart people all day. It's like another level of smart because he's not quick with the answer. He's thought about everything, and he said, look, I beseech you, whatever you do, please be CEO. And I said, why? That's an unusual thing to hear. And he said, scale with the company, learn how to do it. But if you delegate that, if you hire somebody else to do that, here's what will happen. That person will be very strong. They would have to be able to do it. They will come in. They will start making little decisions. You will say, well, I know that's not right, but I got to give them the room to make the decision, so forth. I got to reroute the wiring of the company so that they realize who's really in charge now, and so let them do it. He said, every day, without knowing it, you make hundreds of little course corrections around this whole building the sustainable digital journalism model. If you start to lose that, somebody else makes those decisions who doesn't understand the business as well as you do. In 6 months, 2 years down the road, we are hundreds of miles off course. So just stick with it, scale with the company. That doesn't mean you can always do it. Like if you don't scale with the company's got to change. Steve Jobs should have been fired from Apple. There's this big story now. Oh, what a bunch of idiots at Apple. They fired Steve Jobs, the biggest, dumbest decision made in business history. Not true. Go back to the history. Steve Jobs was a complete disruptive, egomaniac lunatic who could not ship a product. The company would have just splatted on the rocks if they hadn't fired Steve Jobs. He went off into the wilderness, he learned, he came back, and then he was the genius Steve Jobs that we know about that. But so you have to scale with the company, but that whole passionate founder business thing ultimately turns out does translate well to leadership. And just ask Mark Zuckerberg. I mean, that guy just laser focused from the beginning, from his dorm room on what Facebook could become. He couldn't have just replaced himself with a manager. Facebook is what it is today because he stayed there and then he hired Cheryl. And it turned out to be a very good combination.
So I'd like to dissect this a bit in case it wasn't clear, because something really important happened in what you said, which is you play different roles in the company. Some days you're a shareholder and thinking about the company and the value. Some days you're CEO. Well, every day you're CEO. But you change your approach. If you're monochromatic and just have one approach, that's when you can have some pitfalls. But you have to have multiple personalities to some extent, multiple perspectives to be successful. You agree?
You have to be flexible and learn all the time. And I have learned a huge amount over 8 years. And if things continue as they are and we get bigger, I will have to continue to learn. It changes all the time. We're a global organization now. You have to speak very differently to hundreds of people than to 3 people at the loading dock. You just say, do this, do that. Very easy. It changes, and you do have to learn. And there are different pieces of it. And one of the things that is pushed back to me a lot by our excellent manager president is you got to give people more room. Don't just tell them what to do. Let them come to you. You've got to. And so that's another thing that I'm learning. But many things will go into that.
Okay. Let's look forward a little bit. Where are we in the cycle? How do we evaluate what today is and what's going to happen?
Tech cycles usually last 7 to 10 years. If you go back to the early 80s and just sort of track them, and you can look at venture capital flows, 7 to 10 years. And then they collapse and come down 30% or something like that, or in the case of the bubble, vastly lower than that, then they start building again. So we're in about year 7 or 8 now. So when are we going to turn? I don't know. It could be now. It could be happening right now. I mean, there's some very crazy things going on in Silicon Valley. I mean, money is literally falling from the sky. Like every day. Some dog bone delivery service raises 30 million. It's like, wow. I remember when it was like 30 million only went to the guy who wanted to launch a satellite. And now some dog bone delivery service just gets 30 million from it.
How much did Amazon raise in the IPO? It was maybe 50.
Oh, fine. Well, companies usually go public way, way earlier.
Yeah.
And so forth. Amazon was only worth 500 million. Like the dog bone delivery service was probably valued at 500 million. Yeah. So that's not going to last. And suddenly we're going to go into this period where it's much, much, much harder to raise money. But again, we could be starting to happen now. Might be a year or 2 out. I don't think it goes much longer than that.
Yeah. Am I stupid to be buying a Bitcoin a week?
I don't know. To me, no. So Bitcoin it's a binary bet. It could be worth a fraction of a penny, or it could be worth $1 million, ultimately, per Bitcoin. If it becomes adopted as a worldwide currency and so forth, it'd be a great investment. So you just got to look at the binary. And the odds, actually, he could lose everything. And there's a decent chance of that he will look like a complete idiot. And as somebody who shorted Continental Airlines, you remember them back in like 17 incarnations ago, explained to me, he's like, you can make just as much money shorting a $1 stock that's about to go bankrupt as you can shorting a $150 super overvalued company that might go to 20. In fact, you can make more. You still make 99.9%. But if Bitcoin goes to zero, all you can lose is all of your money.
100%.
That's fine. And that's fine. 100% is okay. If it goes to $1 million, woo, that is what's called an asymmetric return. And a gambler sees that and says, I like it. Give me lots and lots of those bets. And so I think it's a reasonable bet. I'm going to buy a Bitcoin or two, just for the hell of it.
It's direct deposit every week?
But I'm fully ready now.
Average down?
No. Just take some play money, move the chips over, and forget about them for 50 years.
Well, it was interesting.
And they're probably going off the table.
I don't know if you saw this, but Turinga yesterday, which is the number 2 to Facebook in Latin America, announced that they would actually give Bitcoins to users that generate content. So they're compensating people to generate content on their social network. Is that a model for the future, whether it's Bitcoin or something else?
I doubt it.
No.
I mean, paying people for content is reasonable, and the Bitcoin
Isn't that what they're doing?
Yeah, so sure. I mean, I don't know that the social network's going to have a business model that survives. Facebook doesn't pay anybody for content. They have 1.4 billion users, so that's a pretty good model.
You guys, if you have some questions, we've got about 5 minutes left, so I'm happy to look to the audience, and if hands pop up, one popped up.
Mr. Blodget, I see you on CNBC all the time, and I appreciate your honesty. So I'm going to ask you what I think is a tough question. In a world of Amazons and Facebooks, who are not just a business, but a platform, is there opportunity for a platform of the future? And can they get there? And have you given any thought to what kind of a platform it might be? Bioinformatics or logistics or business software? Can a company get there, or are we stuck with the dogmas?
Can you repeat it?
The question is, are there going to be platforms that are different than the platforms we have today, like Facebook and the social networks, presumably, that are different in the future? I can say with 100% certainty, absolutely. I don't know what they are. I do not spend my time now talking to really forward-looking venture capitalists as to what's next. I mean, some of the things that I hear about, this actually goes to the healthcare company, of the folks who do that, they look 5 to 10 years out. They don't chase what's hot today. Healthcare is one of the big opportunities. Bitcoin's another, and not Bitcoin, but the blockchain. Like, people think, okay, that thing could be that could be a platform for all sorts of things. So that's another thing. But like a new social network, that's pretty much 5 years ago. And so lots are still launching, but it's very hard to gain traction and so forth. So I'm unfortunately not I can't give you a good answer because I don't spend my time doing that anymore. But
Go ahead.
My question is for your business. How do you think about Facebook now trying to get publication companies to basically host their service for Facebook? What are the sort of takes from your point of view from that business model? And second question is, when you look at BuzzFeed and what they're doing in terms of native advertising, do you think that's here to stay? And do you think that kind of model could be useful for your business in terms of very high quality, different audience, but so maybe they're sensitive to like what I'm actually reading right now, right? The advertising will be constant.
So the whole journalism industry is collectively freaking out because Facebook, which sends a lot of readers, is now talking about, hey, we want your content in Facebook. And especially the traditional guys like, oh, no, we must control everything, and Facebook's the devil, except we love the millions of people you send us every day. And so forth. So the big question about that. I think actually Facebook, what they actually do want to do is improve the experience. I think that's great. They are already doing it with video. Facebook launched video a year or two ago. Our Facebook video views are just exploding because we are taking video and we are sending it to Facebook, and Facebook is integrating it into the experience. And that's the way it's working for BuzzFeed and many others. And it is a much better experience. They figured out a very nice way to do it. So is there an analog for print or text or photos to do that and live on Facebook? I think absolutely. I think we will get there. To me, it's really, except for Facebook is huge and very dominant, it's like having a cable company with 50% of the market. It's similar to the cable analogy, which is if you have a TV network, in order to get it in front of people's eyeballs, you have to do a deal with a TV distributor, which is a cable network. That's all Facebook is. And the way those deals work is, okay, we'll take your network, maybe we'll pay you directly for it, maybe we'll give you a couple of ads per hour. There has to be a way that publishers get paid. We need to be able to pay our journalists. And Facebook's moving toward that. They've just started a video program that'll do that. So I feel okay about it. I don't, and in part because, as Facebook has pointed out to me, it's like, don't mean to insult you, but like wrap up the entire content industry, the marketing budget for the entire industry, it's like 15% of Procter & Gamble, one actual big advertiser. So we don't want to put you out of business. We like what you're doing for us. In terms of native advertising, I think we're just in the beginning of really figuring out what that looks like. And if you look at all other media, TV ads are native to television. They're just mini versions of the stories that we're watching. It used to be the soap thing right on the front of the thing. They didn't have ads. Then they figured out, okay, how to do this, and it worked. So that's what the industry is still doing. We're figuring out what's the right format for telling stories. How do we do it? Native is a good step toward that. We're doing some of that. And so ultimately, I think that'll continue to grow. But I think it's just a way to think about it. We're still experimenting. People will always want great stories, and the storytellers will always have to figure out how to get paid in some way. And there will be advertising. It's just a question of how. And 10 years, it'll be much, much clearer.
Okay, my goal for this was to get through 40 minutes with Henry and not use the words slideshow or listicle. And we did that, I think. So I've achieved my goal. Is
Great.
Listicle a word?
I think it is, yeah. Listicles, people love lists. Love them.
So we could have talked for hours and it would have been really fun, but we had 40 minutes and hopefully you got something out of it. So please give a big round of applause for Henry.
Thank you very much. Great.